Hello, everyone, and welcome to another edition of Triangle Investor Interviews. I'm your host, Lucian Valkovic, and before I announce my guest, just a quick reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy or sell any shares, products, or services. Always do your due diligence and consult with your financial advisor. My guest today is David Morgan, a renowned precious metals expert, strategist, and investor with over 4 decades of experience in silver and gold markets. He is widely regarded as one of the most trusted voices in the industry. Dave, it is great to have you back. Welcome, sir.
Well, thank you. Good to be back.
Dave, with the US dollar index hovering near multi-year lows and central banks accumulating record gold reserves, how do you see the broader monetary regime shift influencing the long-term headings for both gold and silver markets, let's say over the next few years? How do you see it?
I think there's been a large shift. I mean, we know that from the price, but I think the subtlety is that the retail market, at least in North America, is pretty much dried up. On balance, it seems there's more sellers than buyers. But the flip side of the coin, excuse the pun, is that the big boys are buying and continue to buy, meaning central banks, maybe hedge funds, sovereign wealth funds, nation states. Talked to one of the primary dealers here before our show, excuse me, and he was telling me that one of the main refiners is basically pouring 1,000-ounce silver bars and 100-ounce gold bars, and they're not pouring any or manufacturing any retail product at all. So all of their efforts, 100% of their time, energy, labor force, etc., goes into the commercial side only. And that's abnormal. I mean, normally there's a mix, but there's such a push to get out commercial product, both gold and silver. So to answer your question, I don't see that trend stopping. I mean, if you look at what's been announced over the mainstream financial arena, which very seldom even happens. I mean, normally the gold price is put up on the financial channels and they mention the price of gold today is, and then they move on to another topic. I mean, they give it 12 seconds. But now you've seen where some really well-known banking firms, brokerage firms, and stalwarts in the investment field have talked about rebalancing your portfolio by adding like 20% gold. One individual's moved that down to 10, but that didn't get reported. But even 10 is somebody like me, which is, outside the mainstream by a long shot, especially these days. Regardless, I think over the next few years, we're going to see that trend continue. And then I expect retail will pick up. Now, what I've been able to determine, North America has been net sales. Other parts of the world, I can't get as good a data. I mean, I have people in China, I have people in Australia. In fact, one of my friends in Australia said that big lineup in Australia, and many people on the web said, oh, they're all lining up to buy. He told me, no, they're all lining up to sell. I don't know if that's true or not. It's hearsay. Nonetheless, I'm going to make this statement. As this trend continues, you will see retail come back in the market. So people that don't want to buy at 50 will buy at 60 in the silver market because it went up from 50. And it's like, I'm afraid of missing out. I understand we're at the final phases of the great currency crisis where, the dollar, I don't trust the dollar. Not that it becomes worth zero. It's just, it's losing value so quickly. I'm not sure what to do other than I need to buy some precious metals. So that's what I see for the next couple of years.
Yeah, agreed, especially on the FOMO part. People are just like that. Yeah, usually the FOMO, when it triggers the price volatility as well. Dave, let's talk a bit about inventory transparency. COMEX reported deliveries have surged while registered stocks remain near historic lows. Do you believe the current inventory reporting mechanisms are still adequate, and or we are flying blind on true physical availability?
No, there's a little incorrect there. The inventory on the COMEX is near record highs, And the registered category, I've watched it for years, not daily, but probably weekly, at least monthly for 4 decades. And the
Sorry.
lowest that inventory's gotten in the registered category has been like 30 million ounces. Right now, last time I checked, we're at 170 million ounces. So there's plenty of metal in the COMEX. Now, the LBMA is a different story. It seems from all indications it's short. It needs more metal in London than exists presently. That may have been rectified here in the last week or so. But as far as what's in the COMEX, no, they have got, an adequate amount, I'll put it that way. The total's around 500 million, which is pretty big. Over 300 million of that is in strong hands called eligible. So, but it's deeper than that. The numbers are accurate, or I believe them. Some people say, oh, they don't even report those numbers accurately. I don't go along with that. I think they are accurate, or pretty darn accurate. The problem is that the place of last resort? In other words, normally people that go through the COMEX to buy it there because either they've had an eligible, it's theirs, and they want to get it out. That's one course of action. The other one is they can't find it readily somewhere else, because most people that use silver for either retail purchases for investment or manufacturing purposes on the industrial side buy it from the people that process silver for industrial purposes. In other words, they buy it from the outlets that manufacture, wire or shot or electronic parts or solder, silver solder, or all those products that are used in industry, which are vast. And they don't mess with the COMEX because they don't need a 1,000-ounce bar. They need it in a mesh form or a liquid form or a solder form or whatever. So when it goes into that, and you see these big moves in and out of the COMEX, to me it indicates, doesn't guarantee, we're getting down to a point where maybe you can't source it anywhere else very easily. So that's something to consider. So the numbers don't tell the whole story, is what I'm trying to convey.
Sure, sure. One connected question: ETF flow versus physical flow. Institutional ETF flows have dwarfed physical bar and coin demand last year, in 2024, even in this year. Under what conditions do you expect a rotation from paper to allocated physical? And what would that do to basis and back dwarfation?
Well, it would lock in that we are really going to see some really substantially strong prices in the silver market, and we're going to have a very supportive higher price. The ETFs, this is, I'll put on my, my little hat that says tinfoil here, but it was very interesting to me when silver really started to move again, that the algorithms are flashing. These things flash on people's desks and say buy, and it's almost guaranteed. And silver was flashing, and there wasn't any movement into the ETFs. So again, take it with a grain of salt. Fact is, no one was buying in the ETFs. So that made me think, is the word out amongst the commercials? Don't you dare start buying in the ETFs. Don't you dare promote silver as an investment vehicle. We need it for industry. Keep your mouth shut. Now, that's me. Take it as you will, grain of salt or not. Fact is, when all signals were saying buy, 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 these folks had their hands in their pockets. Very interesting. Now, as you laid out, what happens when they start to pile real physical metal into the ETFs? And I already gave you the answer. It's going to push the price higher. And I think there's no way out of it. I do believe that even if investors don't buy the SLV or the PSLV or these other forms of buying silver through ETFs, buy it either on their own or maybe through, the Asian markets, which are becoming stronger day by day, buying it through the Shanghai Gold Exchange, through the Hong Kong market, maybe forcing London again to deliver metal that they don't have or can't source very easily. So I'm very bullish still. And again, I think it just goes back to, I know I'm repeating, but the numbers tell part of the story, but you really have to look at, uh, you know, how much is actually being delivered here, there, and everywhere. And that gives you a little bit of a better picture, especially when you see discrepancies in the price mechanism, where you might get a premium in the Asian markets that you don't see in the New York market. That distortion tells a lot. It means something isn't right in the market, that there has to be an arbitrage in order to satisfy the physical demand.
Yes, and the numbers speak from themselves. One number that really shocked me. Actually, I knew the number. However, I confirmed it a few days ago. Top five silver producing mines account for over 25% of global output. So let's say if geopolitical tensions disrupt just two of them, what magnitude of supply shock do you model here? And how quickly would that translate in a sustained price spike?
Well, it's at the margin, so it depend on, how much demand there was. I mean, a lot of people say, as you said, I think it's 20%, it could be 25%, it's in that range. But if, primary silver producers only produce 20, 25% of the market, and 75% is based on industrial, which is 60 or so, maybe higher, and jewelry and silverware. So it doesn't leave a lot to be made up. So if we have high demand, as we have had the last 4 years, and the primary silver producers, one or two, were to go dark, shut down, not sell the metal, hold it for higher prices, it would affect the market. Now, that's been done in the past, and it didn't really have that much of an effect. But again, it depends on the demand side. So if you hold back a little bit of supply and demand is greater than supply, then obviously it's going to have an effect. On the other hand, as we've seen in past years, where the demand side isn't that robust, and you hold silver back from, in your warehouse because you don't need to sell it for paper, talking about a mining company, it's had little effect. So it's, so that's the best answer I can give you because it does vary.
That's a great answer. I have one question from one of my follower. If we extrapolate the Fed's balance sheet at the current trajectories and assume M2 continues growing at 6 to 8% annually, what gold price in today's dollars would be required to maintain its purchasing power parity with, let's say, 9071 levels or something like that?
I've done the math. It could be incorrect, but it's like 20,000 the ounce.
Yeah, that's unbelievable. Uh, Dave, what do you see for gold to silver ratio going forward?
I see it favoring silver over the next few years. I think it's going to go from, the 80 or mid 80s into this. I want to see it get under 70, actually, which I believe it will. Once it's under 70, I think it'll start to accelerate and, go to 60. Now, the mean, the average for the last, I don't know, 25 years or so has been like 50, which is much better than 80 or 85. So I do think we'll get to at least that level. But we could get to, 30, 33 was hit already in this bull market. So to touch that again wouldn't surprise me at all. And an all right manic panic phase, which I do believe we're going to see this time, where there's the FOMO hits at large globally. And maybe the commercial bar side is so tight as it's been, starts to really seize, where we get an instance or two of a non-delivery or something like that, failure to deliver. If we were to see something like that on the commercial side, I think there'd be like sharks with blood in the water. I think you'd see a lot of speculators come in, probably based on momentum only, just to take advantage of that very tight silver situation. But time will tell.
Yeah, Yeah. Central banks bought record gold in 2025, but Russia is adding 535 million in silver to their reserves. Why are BRICS nations quietly building silver stacks? As a dollar alternative or something bigger? What do you think?
I think it's strategic. I think it's for war and industry. I don't think it's for monetary purposes, although it could be. But for silver to really get its rightful place in the monetary sphere, it's got to be at the correct gold to silver ratio, which means it's got to get back to the monetary ratio. It would be a minimum of 1/15th the price of gold as a minimum. More probably like the natural ratio, or where we're at now, natural ratio, meaning now the ground is 7-1. So, it'd have to be somewhere around the 10th of the price of gold in order for it to have enough value or purchasing power in fiat terms to be considered as a viable monetary source. But it's essential. It can't be substituted. So for military purposes, many industrial purposes, semiconductors, AI, solar panels, military batteries, batteries that are important like hearing aids and pacemakers, all those uses, if the nation state sees, hey, we need to have enough silver enough of a silver supply to keep our citizenry alive and well, have their well-being at hand with, electrical conductivity, computers, and everything else I named. We need to have a backup supply. We want X amount of silver on our shelves to last us the next 3 years. And if that were to occur, then you would probably be out of silver here, at least in theory, pretty quickly. But most people don't think long range. Obviously, the Russians do. I think there's ever a nation state like Mexico that's a major producer, said, wait a second, this stuff is much more valuable than what we're getting paid. We are going to warehouse 10% for national purposes, maybe on a monetary basis, maybe to, not that that's likely, but just the idea about it. Certainly that amount in a tight market, which we have, could definitely have an effect. And it would have a psychological effect because you've got Russia that's buying it. You've got China that's buying it. You have the Saudis have bought almost 1 million shares of the SLV. So one or two others to step up to the plate and say, I want physical silver, or I'm going to hold back some of our production nationwide, could definitely add to the mix. And the last one is if silver gets voted to be a critical mineral, which the vote hasn't taken place yet because of the government shutdown. But if that were to occur, then that brings the obvious question. Well, now that it's critical, how much do the United States have to put into their stockpile to feel safe? 5 ounces, 50 ounces, 500 ounces? Well, where did it start at? Back in the 1985, when the strategic stockpile was used for the Silver Eagle program, there was 139 million ounces. So let's say the critical stockpile is deemed by the political class to be 100 million ounces. Well, that's 100 million ounces that would vie for the supply that's out there now. And we already know that's tight. So there's a lot of factors in silver's favor right now.
Yes, I believe that you missed one elephant in the room. That's India.
Oh, yeah, I did. You're correct. Yeah, India's got an insatiable demand. They're doing a lot of big solar projects, and they also put some silver ETF together. As that country's become wealthier and wealthier on a per capita basis, and they've always loved silver, now where maybe having 1,000-ounce bars in your basement isn't really that attractive, buying a silver ETF where they're stacking silver bars and it's vaulted for you becomes more attractive. So India is definitely a big player, and thanks for bringing that up.
Sure. Dave, final question. How can average person who has gold and silver at home and wants to buy more at the current prices, how should they balance their portfolio when it comes to gold and silver? And what's your general message for them?
Yeah, I have a paper PDF file that I wrote years ago, and I've tweaked it a couple times. how to use the Morgan report. The first thing I talk about in that report is about the physical holdings. And I still to this day say the older you are, the more you should probably favor gold over silver. The reason being it's an establishment metal. The banks buy it. It really is part of the monetary system. It's a tier one asset as of Basel III, and therefore it's the most stable. Silver's more speculative. So if you're younger, you can, have more silver to gold or higher silver gold ratio. So, but if you're going to buy now, silver's more affordable. And if you are looking long term, I wouldn't jump in right here. We could see a lower price in silver and gold. I don't know. They're establishing a trading range. It hasn't been totally established yet, but buy it over time. That's the best thing. And even if you are just awakening to the gold and silver story, and really it's a much bigger story than gold and silver. It's really monetary history and the failure of fiat currencies. Once you're awake to that, you should buy some regardless of the price, because history's taught us that in the end game, as Rafi Faber likes to refer to it, which is a very accurate statement, in the end game, there's people that have money and people that don't. And people that have a big stock portfolio right now that think it's money may find out down the road that it's not as valuable as they thought, and that gold and silver rise to, let's say, their monetary purpose once again. So what I'm trying to say succinctly is, if you don't own any gold and silver right now and you have a portfolio or something or savings to protect, you more or less could buy at any price. Now, you don't have to buy a lot, but you need to buy some.
That's an excellent point, and I agree with that. Dave, how can people reach out to you?
Best thing is just go to the landing page, themorganreport.com. We have two services. One's free, so get the free one first. And then we have a paid subscription as well. You can investigate from the webpage.
We will leave the link in the description. Dave, thank you very much for joining me today.
Well, my pleasure. Thank you.